Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world of crypto and blockchain. And today I have an amazing guest. Now, he's another amazing guest, but he's an amazing guest because he's going to talk to us about crypto trading and investing. And it's always a great topic. I have Marc Walton, who's the founder of Forex Mentor Pro.com. Marc, welcome to the show today.
Thank you very much. Glad to be here.
You're very welcome. So let me ask you first, let's kick things off with everybody to ask you, what is your background and is it a logical background for what you're doing now?
It's illogical. I failed basic maths 3 times at school. My son, one of my kids was diagnosed with something called dyspraxia years ago, which affected him mobility and things. But it made me realize that I actually had a similar thing in that I have like a number blindness. So whereas a dyslexic person would struggle with words, I have an issue with numbers. And yet I have traded multi-million-dollar accounts for clients and I make a living in financial markets. So no, my maths teacher would certainly never have thought that I would be doing this at my age or at any age. So for me, my father worked in a factory, so there was no financial background with that. I left school at 18. In the UK, you can leave at 16 or you can stay until 18 and then you decide to go to university or not. I had a great time for the last 2 years in school. I was captain of the school football team. I was very into sports, but I didn't want to go to university. I had no idea what I wanted to do. And I got injured playing football badly, so I couldn't play anymore. So I spent the next 2 years wandering around Europe with a guitar on my back and hair down to my shoulders, those halcyon days, and had a great time. And then I had a multitude of jobs. So I worked for the council as a gardener for a few months. I was a bricklayer's assistant. I've done it all really. And then I got into sales. I started my first business when I was 21 with no money and no experience. And I semi-retired. I thought semi-retired when I got coming up to 40. And just at that time, it also coincided with the dot-com boom. So I was quite successful with the dot-com boom, and that kind of got my interest in trading. But I mean, in those days, to trade was you were working off news sheets and you had to ring your broker. So none of all the sophisticated stuff we get to play with these days. And like many people, I did well. It was relatively easy to make money in the initial stages because everything was going up. And then anybody that could put a website together suddenly was, without any substance whatsoever, was creating a company to try to raise money, which obviously has a lot of similarities with crypto now. And I stayed in too long and gave back a lot of the profits. Anyway, at 38, I had sick of the weather in the UK. I was sick of the politics. I was sick of employing people. And even though I'd built the business up from nothing to a decent level, I thought, you know what? I don't want to do this anymore. So we sold the main house. We sold the business. My wife and I, we bought some rental properties to create income. And we left with a suitcase each and we went to live in the Canary Islands, which is off the coast of Africa. And I went to sing and play in a band, and I went from earning 6 figures to earning not very much at all, but thoroughly enjoyed it. And but I had my kids in private school, needed to find another way to make money, and stumbled on Forex trading. And Forex trading is a minefield. Nowadays, it's even more of a minefield. It's very similar to crypto. There's so many scammers involved. But for me, it took me a few years to crack it until I found one of your countrymen to help me, a retired trader. And I went on to trade for clients. I was trading multi-million-dollar accounts in the end from my home in the Canary Islands, and did that until 2020. 2008, I started Forex Mentor Pro, teaching people how to trade. And in 2019, I stumbled upon crypto. And that's when it piqued my interest. So very quick potted history. In between that, when I got to 30, I nearly lost everything because a very expensive divorce to get custody of my kids. And I ended up driving a truck for minimum wage and all sorts of things that you have to do to kind of get yourself back off the floor. And whilst living in Spain, I was a trainer, a coach for a football salad team. I think futsal they call it in America. And we actually managed to get in the Spanish second division. So I was trading during the day. I was coaching 6 nights a week, and every other weekend getting on an aeroplane to go play matches with the first team. So a bit of a mixed bag of things I have done.
Very cool. Very cool. There is actually a crypto project that sponsors are sponsored by La Liga.
Yes.
So,
Yeah.
so yeah, very cool. So what I'm interested to know, you said crypto piqued your interest in 2019. It piqued my interest in 2017. I worked for AIG for a number of years, and I didn't hear about Bitcoin at all until they threw me out of AIG. Then I heard about Bitcoin. Like they did a pretty good job keeping it under wraps. But what piqued your interest?
Well, to my shame, one of my students tried to persuade me to mine Bitcoin in 2015. And bear in mind, I'd been dealing in currencies for 12 years by this point. I really should have got it. And I didn't get it. I just couldn't get my head around what it meant, the implications and all the rest of it. And I didn't go ahead with it. And then in 2019, I was thinking of retiring from trading for clients and just to do my own thing and teach a bit and semi-retire. And I started studying the blockchain and understanding the concept a bit better. And I actually did a podcast in 2020 when Bitcoin was at 12,000. And I said to the title of it was why I think this could be the best financial opportunity in your lifetime. And I could see the way things were ramping up. You had a lot of big companies were getting involved and were starting to use blockchains. I don't understand the intricacies of blockchains, as I said to you earlier. Some of your guests are sort of super knowledgeable on the subject. I just know that it works and it does this, and as a result of which you need a token, and therefore we can make money as a speculator. That's been my journey with it. And as I say, we had the podcast in the October of 2020. I actually bought my first Bitcoin personally in February 2020, 8 grand. And the following month, the COVID crisis hit and it dropped to 4. So it wasn't the best investment in the first 4 weeks. But again, because I could see what was going on, and I mean, bear in mind at this time you had Jamie Dimon saying that it was a Ponzi, and if any of his staff bought it, they would immediately be out of JP Morgan. Larry Fink at BlackRock was saying it's a scam, it's a racketeer. And I said to people in this podcast, listen, when these guys get this to a level that they can get involved, they will flip 100%. And obviously that's what happened. And we made a serious amount of money in a very, very short period of time, because from the October when Bitcoin was at 12,000, I'd said in this podcast that I thought that it would double and double again. And it actually tripled within 11 weeks. So it was insane. And some of the other tokens we had Cardano, ADA. I think we paid 5 cents for it and it peaked at $3. And we were buying Ethereum at 180 and it peaked at nearly 5,000. So by being in the right place at the right time, we were able to make a lot of money. But because I'd learned from my expensive mistake in the 90s with the dot-com boom, I was saying to my clients and to my students and to family and anybody that would listen, get the initial stake out. When Bitcoin goes from 8 to 20, take the 8 out, because this thing is going to be so wild, and all of them, initial goal is take the stake out. We've started to buy crypto again in 2023 because I could see it was livening up again. And last year, the best one I had was H bar, which went up 500% in 3 weeks. And this is all using a combination of technical analysis and fundamental analysis. So from an exciting money-making point of view, the potential, if you can catch the right thing at the right time, is nuts. I have a chart in front of me now, and Bitcoin today, if you'd originally just bought it when I started at 8 grand, it's still up 1,000% even after the pullbacks this week. And so I'm really not into this conventional financial advice of just put money in the S&P and you can retire when you're 75 because you'll have $1 million in the bank. I'm sorry, I don't agree with that. And when you look at how the stock market, when it crashed in 2008-9, it dropped 50% and it took 5 years to recover. So for me to look at alternate ways to be making money, and crypto is nuts. And I think that as it becomes more, it needs to be more accessible to the man in the street because it's still too complicated. It's still too scary when you're sending stuff from wallet to wallet. We've seen this thing last week where 1.5 billion's gone from ETH from, was it BitGet, one of the big brokerages?
Yeah.
Imagine pushing the button to send 1.5 billion and it going wrong. Dear me. So, um, yeah, it's been very interesting. And I think people need to understand the reasons why. And I say now that it's going mainstream, there's the good side and the bad side with the mainstream. With the big boys come in, they are experts at manipulating markets. So we've just had a pullback the last few days. We've dropped from 95 to 85. And I was saying to somebody this morning, the talking heads and the thinks of this world are going to be on the telly saying, oh, well, you should have come to us because this is a really tricky market and it's going to drop further because clearly they're going to sit there waiting for it to drop. So that's a potted history of it. So I missed out in 2015. I caught it in 2020. And the good thing was when it all crashed, because we'd taken out the stake and taken out the profit, yes, it was painful, but you were not losing money. You just saw some of your profits disappear. And I just sat on it. I mean, Cardano went down to, I can't remember the summer, maybe 50 cents. And it just sat there for 2 years. And the option was, well, hey, if I pull the money out and put it in the bank, you're going to make 4%. You put it into a bond, government bond is going to make 4%. I'm just going to leave it. And so, for example, last year with XRP, because the SEC were going after XRP, I was buying it around 50 cents because I was following the court case. And there's a couple of really good lawyers on Twitter, X. There's a guy called John Deaton who's doing a class action for them. And there's another guy called Jeremy Hogan. I'm not sure if Jeremy Hogan's Canadian. But they were explaining what was going on. And as the process was going along, XRP were winning a bit and winning a bit and winning a bit. So it was worth, in that case, having a punt. Well, it shot up when Trump came into power from 50 cents to 250. And again, insane gains. And you're not having to put a lot of money in. And again, the whole point of this is it's money you can afford to lose and you don't put your pension in it. But there was an interview with John Paul Tudor, I always say John Paul Tudor. There was a pop music guy called Paul Jones. John Paul Tudor Jones. He's one of the richest men in America and he runs a fund. And he was saying in 2020, he said, I'm going to put 2% into it. And I kind of think it'll make more than the other 98%. He was referring to Bitcoin. But if it doesn't, it won't kill me. And that's my way of looking at this. I mean, at my time of life, I've got far more tied up in this than I ought to do from a responsible planning for pensions, etc. But I think there's still potential to make a lot of money. And as I say, the more that they make it easier for the man in the street as well, then the easier and the better it would get on certain projects. Now there's too many. When I started 2020, there was about 6,000 projects. I saw a figure the other day, there's 36.5 million.
Yeah.
So when you look at the memes and the NFTs, I didn't buy them. My wife does. She bought Bonk. I did buy Doge, but that was because of Elon. And my wife has bought various crazy ones for a few $100s in this, and this. But the point is, when a crash comes, the first thing that goes out of the window to me are NFTs and meme coins. And now because there's so many projects that the silly money really has got to be spread too thin. So my original portfolio, the top ones, when Trump got back into power and the SEC were changing tack, and now they're talking about regulating it in a positive way, it was the old projects that have come back into focus. And for me, everything I bought and invested in it had to be faster, smarter, cheaper, revolutionizing the sector it's in, and it has to be being used. And so XRP is a classic for that. There's talk about XRP replacing I've forgotten the words now, the way they describe it now in the UK, there's a term for it, but the way that banks move money around the world.
Swift.
Swift, that's correct. I mean, Swift is 50 years old. It's like Pigeon Post, the way that it sends money around the world, and it can take you 5 days, and it costs a lot of money. Whereas XRP is instant. And I tell the story. I had a client sent me $10,000 via PayPal, and he sent it in Australian dollars. PayPal charged me 6% to receive it because it was Australian dollars, and another 2% to convert it into euros because I live in the Eurozone. So it's just cost me $800 to receive 10,000. XRP cost the client 5 cents and me nothing, and it was there in an instant. So for me, that is faster, smarter, cheaper. It's revolutionizing, etc. Now there are issues with XRP going forwards with it being a private company, but at least the token makes sense at this moment in time for me.
Yeah, makes sense. So I want to get into some parallels between now, like you said, things are ramping up. I want to get into it a little bit later. You name names, and this is one of the things that people get confused about. They say, "Oh, this famous person is buying or selling their crypto, like the Dave Portnoy coin or some Trump coin." You know, they have like those people in regular people's minds. People are gurus, but they're actually not. They actually have no experience with blockchain, no experience with accounting, none. Like, how do you? And some of the gurus on social media like change their perception or their what they say like 8 times a day. It's like
Yeah.
how do you cut through crap? And I don't want to call these people crap, but how do you cut through the crap, like, and bypass these gurus to be able to start trading on your own? What do you have to bring to the table besides cash?
Yeah.
And what skills could you have to be able to discover how you can be successful?
Well, A, don't use leverage because if you use leverage, you will get screwed. There was $2 billion worth of leverage trades when last time Bitcoin dropped. So don't use leverage. I actually buy the tokens and I hold them. And obviously for those who are not familiar, it's called hodling. And the reason it's called hodling is because it's hold on for dear life, and it really is. But the way I do it, as I mentioned earlier, it has to fit the rules. If it doesn't fit the rules, then I'm not going to buy it. So it's kind of bringing old school fundamental analysis into crypto when it comes to investing. And it's more investing rather than trading. But I do use technical analysis. So if price consolidates for a period of time and it starts to break out, then I will sometimes buy a token just because I believe that it could make some money. And I only buy a crypto if I think it can make at least 35% return in a very short space of time. And I only buy stocks if I think that they can make 25% in a short space of time. But another way that you can make money indirectly with Bitcoin, for example, is MicroStrategy last year was my best stock. MicroStrategy went up 1,400% in 15 months. Why? Because Bitcoin set off in the October 23, I think it was. Bitcoin set off, and at the time, Michael Saylor's lot, I think, sat on 150,000 Bitcoin. Well, it's not rocket science. If Bitcoin's going up and this guy's sat on the load, this has the potential to go. And that doubled within weeks. And then it actually went up. I think we bought at 35 and it went up to 2,000. And then it came back down again, and then they did a share split and they split it into 10. The safer one for me at the minute, and this is not financial advice because I am not a licensed financial advisor anywhere, but I was talking to a family member this morning who's late to the party, and I said, well, for me, Coinbase is a good one because it's regulated, it's US, and Trump is wanting US crypto. And so they've got the infrastructure. I mean, technically they've got quite a lot of problems at the moment, but I see it as being in the right place at the right time. And it's less hassle than the wallets. Yes, you don't physically own the Bitcoin, which I do think anybody with any money should have some, but it is an indirect way to get in. And for example, I'm originally from England, although I live in Portugal. In the UK, you can put 20,000 a year into a shares account and you don't pay any tax on it. So if you could perhaps within your IRA be able to buy this kind of stock and not pay tax on it, it's easier, cheaper, and no tax as opposed to buying the actual Bitcoin. So there's different ways of looking at this. But for me, it has to fit the criteria. It has to have a real world reason to exist. Somebody paid an NFT over $1 million for the screenshot of the first tweet. For the life of me, I think they tried to sell it for 30,000 recently. For the life of me, I will never get my head around it. I mean, it was a boom and everything was going crazy, but I just can't get my head around that. The only way I can think that the guy thought it was worth it is maybe he was buying Ethereum at 2 cents 10 years ago, and there for him it was a few $1,000s. But clearly, in a crash, the first thing to go is the thing without any substance and any real value. So that's my way of dealing with it.
uh, I love the fact that you said that because guess what? During the 2017, I was an ICO advisor, and
Okay.
I built my whole entire business around being an ICO advisor. When crypto winter hit and ICOs were gone, I lost my whole business.
Yeah.
So you got to build. Now I write books and do podcasts. So I'm building on structure. I'm building on like laying one brick at a time, which is more
Yes.
takes longer. But
Yes.
you mentioned rules.
Yeah.
I'll talk about them. In the stock market, the rules are easy. You have to look at operating margins. You have to look at working capital. You have to look at debt capitalization and ROI. And there's rules in the balance sheet and income statement and ways that financial analysts do that. There are no rules in crypto, are there? What rules do you have to create to be an effective trader and investor because those particular things don't exist.
Well, even with stocks, I'm slightly different. I don't bother with the FANG stocks and things. The days of just put money into dividend paying stocks and it'll pay you 5-6% a year. Well, I mean, 5-6% a year, and you don't even get that with most of them now, is terrible because the true rate of inflation is still over 10%. And I think the years of the dividend stocks even paying 5% have long gone now. Some of the FANGs don't pay any, and some are only paying 1 or 2%. So why would I want to buy something that's so expensive? And so the way that I deal with things is to look at things in a cyclical way. I made a lot of money after the financial crash getting involved in gold because gold, surprisingly, as with COVID, dropped significantly when the crash came, but it only went down half as much as the S&P in 2008. And gold recovered within a year and then tripled because, hey, common sense says when everybody's scared, if you had your pension and you were retiring in 2008 and you've $1 million in there, and suddenly you're woken up this morning and you've got half a million, A, you're not retiring tomorrow, and B, you're very wary about getting involved again. The marketers and the hedge funds say, hey, and if you always have to notice, when do these funds produce graphs from? And a lot of them produce graphs from 2010. If you just put your money, yeah, but what happens if you put it in 2007 or so gold logically is the ultimate safe haven, and it's still the same this time. And I got into gold in 2022 this time when it was at $1,800 an ounce because with all the money printing that had gone on with the COVID crisis, it was obviously inflationary. The Fed was saying, "Oh, we think we've got it under control and it might go up to 2%." And it's like, you're talking nuts. So if you can catch the right cycle at the right time. So I don't bother with the FANG stocks. I don't go too far into balance sheets. I look at the sector and the health of the sector. Remember, I only buy a stock if I think it can make at least 25%. The best stocks last year, apart from MicroStrategy for me, were gold mining stocks. And at the moment, I see gold mining stocks as being a good opportunity because the price of gold and silver in the ground at the moment, in effect, is at a discount. You have gold at all-time highs today at 2,900. You've got silver, I think, at $31 at the moment. But some of the mining stocks last year, my best mining stock made 260%. But the balance sheet and the formal way of looking at it, you wouldn't necessarily have bought it. And it's called EXK in Endeavour Silver. And it came down a year ago to the COVID low, and gold and silver were going up, and yet this was dropping. And I kind of looked at this and thought, well, hang on a minute. If this was how bad it got in COVID, this is a market where this product valuation is going up for reasons I believe in. This is cheap. And so silver last year was a really good year for silver. You made 35%. EXK made 250%. So for me, I am not looking just at conventional. I'm zero interested in sitting holding Amazon, but I have levels set now. If it crashes, then I'll buy because I want to buy it when it's cheap and at the right price. And if you look at what Buffett's doing at the moment with Berkshire Hathaway, he's sat on $350 billion in cash. And there was one of the headlines in the other day in one of the financial press who said, basically, we wonder why. Well, it's blooming obvious why, because he's expecting it to come down and then he's going to wade in and buy when everybody else panics. And so that's my kind of way of looking at things, trying to catch the right thing. So then in February 23, I started to see Bitcoin starting to pick up a little bit. I started actively buying again in the July when it was at 45, 50 grand. And I said last year, in the February last year, I said, I think that Bitcoin will hit 100K this year. And I got people saying, you blokes nuts and why? But you could see a buildup of energy and interest. And now we've got the ETFs. Now the big boys, it's not a Ponzi anymore. It's not rat poison. Oh, it's actually really good if you come to us. And I have a client who's runs a family office in America. And he actually came to me 4 or 5 years ago when crypto started. And he was at the time he was working for a hedge fund. And he said, I understand from one of my clients, you're not trading Forex for clients anymore. Would you send them to me? And I said, well, how much did you make last year? In 2019, many of the hedge funds didn't make anything. Oh, 4 or 5%. Yeah, and what did the client get? Well, 3. Okay. And I showed him my crypto portfolio at the time, which was up almost 1,000%. And the guy's eyes went, what the hell are you doing? So anyway, he hired me, long story short, to teach him privately, which I did. Anyway, he's now for the last 3 years been working for a family office. And he was telling me for the last 2 years, it's been so frustrating prior to the ETFs because he could not recommend to the client to get involved into crypto. He had private meetings with some of the sons who were heavily into it, but the general concept, you had to go through compliance. Then, even when the ETFs came in, it wasn't for some of them instantly they could get involved. It's been a slow build-up. Now, crypto per se itself, I think anybody with a decent amount of money ought to own at least one Bitcoin. And the reason why I say that is to be outside the financial system, because the one thing going on now with all these big funds and ETFs, you never know exactly what they own. Ultimately, the government can control what they've got. And part of the original concept, as we know for crypto, is to be independent and away from scrutiny and all the rest of it. And all of that is being eroded with what's going on at the moment. But I read that there's 22 million millionaires in America and there's 800 billionaires. Well, if they all bought one, Bitcoin's going to the moon. And if they don't buy one, I think they're nuts. Because if you think about the portability of it, I moved from Spain to Portugal a few years ago to relocate here, and you're only allowed to carry across the border $10,000. And if you carry more than 10 euros, if you carry more than 10,000, they catch you, they're confiscated. You can have a pen drive and you can go wherever you want. Now, the other aspect of it is Trump has just come out and said he's going to ban the central bank digital currency. And I don't know if people are fully aware of the implications of it, but in Europe and the UK, where we are now getting a draconian press or control and regulation from the government, there's Tony Blair, who was the Prime Minister when Bush Jr. was in, was the one that for many people in the UK feel that he should be up for war crimes because he lied to Parliament to get us to go into Iraq. He is still in the background, and he came out and said last year, central bank digital currency, if you don't have your vaccines up to date, you can't fly. They're now talking about a carbon credit limit. So you will have a carbon credit limit for you and your family. So if your house is exceeding the limit, or if you are flying too many times on holiday in a year, you won't be able to fly unless you pay and buy extra carbon credits. And they're trying to sell it in the EU at the moment by saying, well, it'll be really good for poorer people because they'll be able to sell their carbon credits to richer people. And so the whole thing is terrifying. And I say, Trump, he's saying there's no way they're going to do it. Europe's still pushing for it. And the UK is trying to push for it. They're trying to go for a cashless society. And it's all about control. And the ultimate thing is, I mean, I've been an entrepreneur all my life. I started my first business when I was 21. I started my third when I was 30. Part of the attraction for all the hassle and stress that's involved with your own business is a bit of cash. And so if you take all that off people and you tax them to the hilt, what's the incentive for young people to create their own business? So the whole thing to me is if you've got some money, you should have some crypto, some Bitcoin, is my thinking.
I think it's good thinking. I wanna I wanna shift gears a little bit. I like the way you think. I can go a couple of ways here. You know, let's do this. Um, Talked about rules. You talked about being able to live anywhere in the world. Um, I'm not a millionaire. Why? I made some mistakes. Like I said, I built the advisory on nothing.
Yeah,
I had my money in Celsius. So
yeah,
I made some mistakes, right?
yeah,
You made some mistakes too. How would you learn from them? And then in turn, something I want to talk about this too, is, women who seem to make less than mistakes than us seem to make really good traders. Like
yeah.
why are we men making mistakes, and why are the women great traders at the same time?
Gosh, we've got to be careful in the modern world. Two blokes talking about women.
I
Uh,
know.
um, I still predominantly, for members of our website and private clients I've taught all over the years, still 95% are men. And so I'm only talking about a small percentage that I personally have dealt with. I think part of the thing is that we are more gung ho. We are not very good at being told what to do. So we can marry ourselves to an idea. And even if it's going against us, we will continue to stick with the idea. And I find that women have a better level of discipline. And there was a book I read recently. It was an old stock tipping book from about 50 years ago. And this really would be sexist. And this is not my saying, this is just a comment. But there was a gentleman about 50 years ago written a stock book. He said that women were better as traders because they were used to running a household and they could appreciate the value of things. Whereas, let's face it, I'm looking at the moment at a car, which really is silly money and it's not logical, but hey ho, I probably would go buy it. Whereas a woman would look at that and say, well, you're a fool. Look at how old you are. What do you think you are? What are you doing? You only use the car once or twice a week. So I think the more willing to, in my experience, to adhere to rules. If you say to the ladies that I have taught, right, these are the clear rules, we write them down. You don't take a trade if there's news coming out. You don't take a trade on an NFP day. You only risk 1% per trade, etc., etc. So I have a full checklist that everybody has to go through. Blokes, me included, have a tendency to just say, "Ah, I know this is going on." And actually, I did this with my wife years ago. My current wife, we've been together 35 years and we get on great. The only time I ever had an issue was in my early days trading Forex, I kept breaking the rules and I kept having to throw more money into an account. And so I said to her, right, what I want to do is I want to show you my book of what I do in a week. And if I break a rule, you have to pull me at it on a weekend. So we'll sit down at the weekend and say, so we sat down the first weekend and she said, well, you broke your rule there. You risked too much. And I said, yeah, but you don't understand because what happened is, and she said, no, you told me to stick to the rules. So, so I think it's partly that. But that's my limited experience of late. And I say it's still very much a male orientated world, certainly in terms of retail traders. Maybe I think the other thing with a lot of men that I have taught over the years, prior to prior to COVID, my average private client was 50 plus, middle age, middle age now, middle income, either got his own business or in management. Kids have grown up, gone off to college, the mortgage is paid, and they're sick of what they're doing. They've kept doing what they've done for the last 20 years because the key role is to provide. And now they're getting a bit worried about retirement. And so that was kind of my classic private client, and I would get 1 in 10 would be a lady, and it would be a different mentality generally. And so again, I don't know if it's the old thing about the provider, and since COVID, it's quite funny because my private clients were mainly young men. And they, having lived through the COVID thing, said, you know what, I am not going to be dependent on a business, on a company for my living. I'm not going to rely on the government. I'm going to do something about it. And I did that with my own daughter, my youngest daughter, when she finished university. She said, I really don't know what I want to do. And she'd grown up in the Canary Islands, which is a beautiful part of the world. And she'd gone to university in England, and the weather's crap and she didn't like it. And I said, well, the best thing to do is I'll give you some money, get on a plane and go somewhere. Because if you get on the wheel, you're going to be paying rent, you're going to be paying bus fares, you're going to be getting up at 6 in the morning when it's cold and wet and miserable to go do a job that by the third week of the month you're staying in and eating soup because you've no money. Bit of an extreme. And she did. She went off to Australia. She's been to 30 odd countries. She's still traveling, makes a living online. So thinking differently against the herd, both in life and investing. And that's where I think the crypto thing comes into excitement, because it's really weird. Forex, I only risk 1%, and I'm very strict on the rules. Crypto, I've broken a lot of rules, but the gains are insane when you catch it at the right time.
Yeah. So what I heard you say, taking women and men out of the equation, is it's better to be disciplined than it is to chase.
Yes. Oh, yeah. Yeah. If something goes off, if it sets off without you, leave it, because it will either come back or there will be another opportunity. But don't chase it, because if you chase it, it's sod's law. You will dive into something just at the second when it turns back the other way. And when Bitcoin went up 2020, 21, it went up, it pulled back, and it did it 5 times. And each time it pulled back into a trend line, a simple moving average, and a Fibonacci level. It really was that easy. So don't chase it. If it goes without you, you have to learn to sit on your hands.
Yeah. So I'm going to have now. I want to come back to the question. What I was going to ask you for the last one. You noticed things like a tidal wave, right? In 2017, you sat there and you saw Ethereum begin to bubble. You saw Bitcoin begin to bubble, and then they took off in 2021, 2021.
Yeah.
Now I'm looking at things like Solana, even though all the meme coins are built on there.
Yeah.
There's activity, underneath there, and then there's activity underneath things like Litecoin was getting ETF and others. What do you see as the tidal wave moment, for that, or is it just going to fizzle out?
Solana is probably my third biggest holding. I do believe in Solana. I bought some more the other day because it came down to 130 odd, and it was at 230 odd 2 months ago. I think the thing is, we've been spoiled in the past in that when last time when the wave started, it just went. And then the expectation was when Trump won the election, and because he'd suddenly changed tack on crypto, he'd received a lot of money, as did the Democrats, for contributions. And his sons are very much into crypto. And also the people around him. J.D. Vance allegedly holds at least $500,000 worth of Bitcoin. Robert Kennedy Jr. is pro-crypto. So you've now got this scenario. Thank God they've got rid of Gensler at the SEC, because I believe that Biden put him in to kill crypto, or to strangle it as much as possible. I mean, you even had the lawyers for the SEC were criticized by the judge for lying. That's how rogue the SEC went. So the belief was then that on the first day in power, he would sign an edict that would give crypto all the power, and everybody it would all go to the moon. But what he actually did, I mean, apart from the fact he's signing things every single day, is that he said, okay, we need 180 days for the new leaders of the SEC to get together with the Brad Garlinghouse from XRP. I think Charles Hoskins is involved from ADA. Get some of the people in, and this time let's come up with something that's regulated in a way that it means it can work, and America can lead the world in crypto. And so he's given it 180 days, which is sensible. But because we've been spoiled in the past, everybody was thinking, go, 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 it's going to, oh, crap, it's going down. But when it's going down, to me, is the time to be thinking, well, okay, Solana's really cheap at the minute. not financial advice, but I'll buy a bit more. And we're not saying, I'm not spending tens of thousands on buying a bit more. I might put $500 in. And I was doing it all last summer. Every time I had a few $100, I would buy a bit more XRP. But then it went up 250%. So at the moment, I think everything's treading water. You've got the issue with the stock market the other day. I mean, thank God Nvidia came out with good results yesterday, because otherwise I think the stocks really would have tanked. But because of the uncertainty over the tariffs as well, and now, I mean, some of the data that was coming out with the previous administration I thought was suspect anyway. You've got credit card debt in America. Personal credit card debt is over $1 trillion, I believe now. And we know that inflation is not running at 3%. It's BS. Then the undercurrent of all of this is that there could be a crash. But in terms of crypto will come down as well, because if you go into a risk-off environment, money goes into gold and it comes out of the stock market and it'll come out of crypto. So for me at the moment, I am sitting on what I've already got. If things come down, I'll buy a bit more. And but this time I think it is different in that you have to be patient. The SEC before, what they were saying to the crypto companies is, hey, come in and talk to us. Just come in and explain what you're doing. And as soon as they explain what they're doing, they said, right, we're going to fine you $1 billion. Whereas this time, Hester Peirce, one of the commissioners who was there prior to Gensler, who was always far more favorable with crypto, is involved. I can't remember the name of the new guy that's coming in, but it's going to be, well, okay, if we can't beat it, we'll be the best at it. Whereas the UK, I talked to a family member yesterday, struggling still to get money from a bank account into a crypto account because the UK government won't allow it. And I even have a multi-millionaire client of mine who was trying to put 20 grand into Binance, I think, the other week, or Coinbase. And some kid from the bank rings him and says, ooh, are you sure you know what you're doing? It's very, very risky. And it's like, it's my money. You can see my bank balance, send the money. And Europe is the same. They are trying to crush it with regulation, allegedly for the benefit of everybody. But if America goes positive with it, there was talk of Trump saying that US crypto projects may be exempt from tax. Well, imagine what that would do to crypto. So I said earlier as well, you've got to make it easier to use. You've got to take away this scariness of moving it around wallets and things. So a lot of the people you've been talking to, and I listened to one of your podcasts the other day, the guy was talking about the very thing. Then I think that ultimately, I think it's going mainstream anyway. The blockchains itself are revolutionizing everything. You just need to be careful what you buy. But it's like you with Celsius. Did you own any others, or did you put it all on Celsius?
I put most of it there.
Yeah.
So I had some others that were off there, but
Yeah.
but mostly.
Well, the way I dealt with it the first time is I had 20 tokens. And I said to people, I said, look, Bitcoin and Ethereum, and at the time XRP, I think was my third, or XRP or ADA, I will buy a reasonable amount of these. But I'm not going to buy just 3 or 4. I'm looking at this as the old style farmer with a basket of seed, and he's spraying it around the land. And some of it's going to fall on fallow ground. Some of it will do okay. Some of it will grow into oak trees or whatever. And that's the way I looked at it. So rather than just going for one thing, is to spread it, because some of them, there was a famous one called XVG that it went up tens of thousands of percent in a week. Do you know the story of that one?
No.
XVG.
Verge?
Yeah.
Okay. I interviewed Verge a couple of years ago, but I didn't know the story.
Okay. I think it's Verge, XVG. They were the first credit card. Credit card companies refused to let people pay for Pornhub with credit cards. XVG were the first crypto company that people could pay for Pornhub via crypto. And if you think of the benefit for the user, well, suddenly the partner doesn't know that they're signed up. The bank don't know that they're signed up. And so there's a privacy aspect for the user, but it just went ballistic. So again, if you have a reasonable amount of them, so I have like a first division First division is Bitcoin, Solana, ADA, XRP, HBAR now is back in, and XLM, I think, is another one. There is another one as well. And then I have two more leagues down, and I kind of say to people, I would pick more Bitcoin than anything. I have 50 odd percent Bitcoin, 20% Ethereum, which is too much, 5% Solana and Cardano, etc. And then the rest of them, I've got 1%. But some of those 1% will make more than Bitcoin. So that's one of the things. And then the other thing on the subject of what to do, I have a client who in 2015 owned 100 Bitcoin and he sold them all. But when he sold them all, he had tripled his money. So at the time, it wasn't a bad decision. But he said to me, he said, I wish to God I'd met you first, because what I say to people is, look, if you think it's still got legs, sell 75% of it, but just keep a bit. And then, what else if you can afford it, just leave it sat there. So again, don't just back one horse and spread the risk a little, would be my suggestion.
Awesome. So great takeaways. Have discipline, patience, don't chase, and take profits. It sounds good to me.
Yes.
It sounds like a winning strategy. So I want to thank you. Thank you very much for your time today. This has been a wonderful conversation. I had a lot of fun. So
I'm glad you enjoyed
it.
Why is Elton John behind you? I've been wondering.
Ellen, that's not.
It looks like Elton John.
Actually, my logo was created by a founder in the UK.
Okay.
Yeah, so Jamie Goldblatt from Mind Show 360. So and I've been using it as my logo the whole time. So
Yeah.
I have one last question.
Cool.
How can people find out more information about you, about Forex Mentor Pro, become clients? How can they do that?
Yeah, I have another website as well called yourinvestingfuture.com. That's more to do with crypto and alternate investments. But Forex Mentor Pro is kind of the main place to go. We do a thing there where if people want to join for $69 and they don't like it, we'll give them the money back. So if you're interested in finding out a little bit more, obviously with anybody that's teaching anything, dig deep and have a good look round, and because there are a lot of questionable characters in this industry, and crypto even more so. So do your research. And we've got lots of stuff on YouTube as well, and there's markwalton.com with a C. So I'm all over the place.
Awesome. Thank you very much for your time today.
Yeah, it was great to meet you, Jamil. Best of luck, and back up that slippery pole. Okay, look after yourself. Bye-bye.